the silver market has been short about 200 million ounces every year for the last 5 years. And the projections are that for this year, it's going to be somewhere around 145, 150 million ounces again. So if you add together the last, let's say, including this year, these last 5 years, you're at you're at about a full year's supply of silver that we've been short for the last 5 years. So it's tremendous. And the question always comes back, well, if the silver market is so tight, how come we haven't seen the silver price just go through the roof?
Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Most of you know me as Triangle Investor from social media. Today, we are joined by Peter Krauth, the author of The Great Silver Bull and the editor of Silver Stock Investor. Pete, as always, great to see you. Welcome back.
Luchan, as always, I'm happy to be here and looking forward to chatting with you.
Thank you very much. It has been a while since our last interview. A lot of things to cover when it comes to silver, but I would like to start with your expert view, as you are a silver expert, on a broader silver market. Where are we now? Where are we going next? Pretty big question, but try to answer it in, let's say, 5 minutes.
Yes, okay. Well, maybe I can do it in even less. I don't want your audience to get bored. So, the first thing is that I think that silver is, if you look at where it was a little over a year ago, still silver's doing quite well. Uh, to the best of my memory, in say February of 2024, it was bottoming around $22 and then made a strong rally within a few months, 6, 7 months, to believe it was $35 in October. And then it backed off, kind of went sideways in, I would say, the 28 to 30 range for a little while. And then we had a run up again recently. And if you look at silver futures prices, it actually hit the target I was saying earlier this year, that in the first half we would reach $35. And we did reach $35, at least temporarily, a few weeks back, in silver futures prices. Now, I think that, first of all, even at 30 or $31, that's very strong compared to $22, February of last year. So silver's looking quite good. The miners are, I think, happier because obviously that there have been increases in costs, but they certainly are earning better margins at this point. And I think that we could see considerably higher silver prices in the second half of this year. A few things I think will be driving that. But if we come back again for a moment or two, we saw silver, as I say, run up to 34, $35 recently, and it backed off. It certainly backed off with these big tariff announcements. I think that silver was. It's interesting that silver actually backed off before the announcements, a few weeks before, um, despite gold not backing off. So certainly they've acted differently. Silver has taken, in recent weeks at least, has taken on more of its role, I think, of an industrial metal, which is about 60% of its consumption these days. Um,
How
but I
much?
think
Sorry,
it
60.
60, yes. And I think it has, we can talk about that, how that has shifted if you want afterwards, but I think it correcting before gold is almost as though it was sniffing out that we were going to have a higher risk of recession at some point. And it's almost as though it was saying something's coming that will slow down the economy significantly. And because of that, there's a risk that the consumption of silver will fall off, again, it being more of an industrial metal. And to that extent, I think it was sort of foretelling what has happened in the last couple of weeks. Now, I also think that to some extent, a backing off because of concerns of decreased consumption due to a slower economy is warranted. I also think that it's probably overblown by the market. We can talk about details relating to that as well, but I think that overall, after a couple of quarters, perhaps the market will see that the consumption of silver really has stayed very robust for several reasons, and I think that that is what points to considerably higher silver prices in the second half of this year.
Yeah, a lot of moving parts when it comes to silver. In March, March was the second highest, if I read correctly. March was the second highest month for Comex silver deliveries on record. Please
Exactly.
explain the significance and the implications of that.
Yes. So there are a lot of implications. So just for your viewers to maybe understand a little bit of what has been going on in the silver market, not only in silver, to be fair, gold, copper and other merchandise, other goods and so on. So since Trump was elected back in November, until recently, there had been some talk of, him imposing tariffs. And obviously, the tariff talk got a lot more concrete once he was inaugurated and took over as president in late January. But despite that, the market saw the risk of tariffs being imposed on all kinds of goods that would be imported into the US. So his thinking is that we tariff uh, manufactured goods being imported into the US, that makes them more expensive, and it stimulates consumption at home and production at home in the US. But that risk of tariffs on silver, for example, is like I say, as well as gold and other things, other metals and whatever, got participants in the US concerned that if they had to make deliveries of these metals that they already didn't have control of and that were already in the US, they would have to import them after tariffs were being applied. And of course, they would have to pay that say 25% tariff or so on the value of the amount that they had to deliver to a domestic client. And so we've seen huge flows of silver come out of London, where we have the largest inventories, and flow west to New York. Now, interestingly, a lot of this is, I'm going to say, to some extent anecdotal because there isn't perfect transparency on a lot of this data. But what we do know is that not only was there a lot of silver, like outsized amounts of silver were flowing from London to New York, but when it got to New York, we've had huge deliveries. And you pointed to that. You're absolutely right. March had the second highest delivery from Comex ever. It's worth pointing out, too, that Comex was not built or designed for taking physical delivery. It's a futures market, and it was built to trade futures contracts and to use those to hedge prices. So for manufacturers or whomever, deals with large amounts of silver, and we're going to talk specifically about silver. It's the same for all the commodities, but to be able to hedge risks that they may have of silver prices moving up or down. So to see huge amounts of delivery of physical silver out of the COMEX is very telling. I think that what it does is it speaks to extreme tightness in the silver market. There is nowhere near as much physical supply available as I think a lot of participants or observers believe. And this, I think, is proof. On top of it, I mean, it's true that we're looking back because these are March numbers. We just got these tariffs that have, by the way, Trump has backed off on the majority of them for at least 3 months now. We know that as well. There was already
Except
rumors
China.
of that, right? There were already rumors of that. I think the next day after markets were crushed. But all that to say that this data is looking back. So I think that it's clear that participants were very concerned and took the physical delivery in case they had to themselves deliver to clients to to eliminate the risk, right, of not having the silver and that of the silver having to, have these tariffs applied to them. So that's very telling. But something also anecdotal about deliveries into New York is that I've heard that not only what has there been a lot of silver flowing from London to New York, but also that the we've had higher than normal deliveries, as we've just heard, out from the Comex to take for participants to take physical delivery, and it would stay in the New York area, and it would stay in private vaults. So the point being really that participants want to have their physical silver. They are not comfortable with, for example, for whatever their reasoning, to hold a futures contract that is basically a promise or an option to take physical delivery.
Exactly.
And there are premiums, what we call exchange for physical premiums. So in other words, a premium between the physical price or the spot price and the futures price. And these exchange for physical premiums have been way higher than normal over the last several months. So again, that speaks to participants really wanting to hold the physical silver and eliminate the risk.
Yeah, that's telling. That's definitely telling us something. I had David Morgan yesterday in my show, and I asked him the similar question of how big is the disconnect between the paper silver market versus physical market we have today? How big is the silver deficit?
Well, that's interesting too, because if you look at the data that we have, mostly comes from the Silver Institute, and if you look back at the last, say, 4 years, 5 years, it's very interesting that just again for your viewers to get a quick overview, the silver market is about 1 billion ounces a year of supply. About 85% of that comes from mining, so newly mined silver, and then another 15% comes from recycled silver. So altogether, we have about 1 billion ounces available every year of supply, of new supply.
Mhm.
Um, and however, demand is 20% higher than that on average for the last 5 years, so 1.2 billion ounces. So the silver market has been short about 200 million ounces every year for the last 5 years. And the projections are that for this year, it's going to be somewhere around 145, 150 million ounces again. So if you add together the last, let's say, including this year, these last 5 years, you're at you're at about a full year's supply of silver that we've been short for the last 5 years. So it's tremendous. And the question always comes back, well, if the silver market is so tight, how come we haven't seen the silver price just go through the roof? I mean, there's always obviously lots of talk of manipulation and pressure from outsized quantities of short futures contracts and so on. If we put that aside for a moment, if you look at what has happened in the last, say, 4 years with the inventories in two places. One is the futures exchanges, the main large futures exchanges, the New York Comex, the LBMA in London, the Shanghai in China, and then also the silver ETFs. So that has reversed in the last couple of months. But if you look over the last, say, 4 years, it's been very revealing how the inventories in these markets have consistently been drawn down. So last year, I started to look into this because I too was wondering, how is it possible that, we've got these structural deficits every year, 3, 4, 5 years in a row, but yet the silver price appears to be capped. And the conclusion I came to was that these big consumers of silver, I'm going to say mostly industrial, because a lot of the rest, say investment type consumption is more optional. You can, if the price is high, you can perhaps not buy, etc. But the industrial consumers really have essentially no choice unless the demand for them drops off for some reason. But so that's a pretty consistent demand from the industry side. And so I realized that because there are these relatively large what I call secondary inventories, above ground accumulated inventories of silver. They have been able to go to these stockpiles and buy as they need and draw them down. And this has, if you think about it, that means they can buy silver at prevailing prices and not pressure supply because there is this, as I say, this above ground existing supply that they can draw down. So I believe that is what has been going on since early 2021. But those supplies have drawn down, depending on which market, anywhere from about 40 or 50% down, about 70%. And if you look at, and this was even exacerbated tremendously over the last 3 months when, there was this concern with tariffs. And it's true that supplies from London to New York is not a net drawdown in supplies. It's actually a shifting of where the inventories are, right? They're not necessarily being consumed, they're just being moved around. So they're coming from London and they're going to New York. But the fact that New York has seen massively outsized deliveries to me is very telling as to, again, the tightness in the market. And, as I say, the last 5 years, if you include this year with the forecast for this year,
Mhm.
large supply deficits. And you look at, for example, I think it's S&P Global Intelligence. About a year ago, they were looking at mine supply, and they were saying their forecast is that silver from primary silver miners. So again, there's a lot of information to add, but about 75% of mined silver does not come from silver mines.
Yeah.
It comes from as a byproduct of mining other metals from gold mines, from copper mines, lead and zinc mines, that kind of thing. So only about 25% of mined silver actually comes from silver mines, true or primarily silver mines. So S&P says that even over the next 2 to 3 years, we're going to see silver from primary silver mines actually continue to drop off. So we're going to get less silver coming from silver mines, despite structural deficits in silver, despite the fact that we can't produce enough silver for the annual demand. So the market it's just a perfect setup for an eventual squeeze in terms of silver and that for the silver price to just explode higher at some point.
Yeah, I hear you, Pete, and I agree with you. But what the question that is very often asked in the on the social media, the retail, what event could finally push the silver price more than $35? Is that clearing this inventory, or what series of events could push the price higher? In the short, I'm talking short term, not long term, of course.
Sure. Yes. I mean, I think that you pointed it out exactly. I think it is that we could get to a point where there truly is. Now, I'll qualify that a little bit. So we could get to a point where the inventories are so low, they're critically low, and that is actually has been some of the talk that or some of the info I've read in the last few weeks is that the inventories in London, which is the largest has the largest inventories of silver, have actually come to a level which we would call critically low. The fact that a lot of it has flowed to New York and then that has gone out for delivery, to me speaks to, again, the seriousness and the tightness in the market. So for someone who holds a long silver futures contract and let's say has been counting on, and that's what I think has been going on, as I say, where these inventories have been drawn down the last 4 years, that you've had participants able to go, and again, New York and London were not built for that, but have been able to hold a long futures contract in silver, whatever that may be, say 2 months, 3 months, and then wait for maturity. And at maturity, go to the exchange and say, "Here's my contract. I now want to take physical delivery of the silver that I'm entitled to now that my contract has matured." And you get a major exchange telling that contract holder that we don't have enough silver to meet we're going to have to pay you out, in cash. And that contract holder says, no, 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 I need the silver, not the cash. I'm
Exactly.
using this to manufacture solar panels, for example. I absolutely need the silver. That's when I think, someone's going to scream and we're going to hear about it. And that could be the trigger. That's the type of event that I could see being the trigger.
Yeah, very good point. Silver ratio exceeded 100. I believe last time I checked it was 102. That is on a trajectory for to an all-time high. All-time high was 114, 15, something like that.
Right.
Uh, Pete, what conclusions can we draw from this? Is silver going up? Probably. Gold maybe going down? Could we see major decoupling from each other?
I don't think so. I don't think we'll see a major decoupling. I mean, I really think that yes, the ratio is high. It peaked, if I remember right, even maybe if it's sort of on an intraday basis, it peaked at I think 120 even or 125. Would have been maybe mid-March of 2020 when we had
2020, yeah.
that big panic in COVID. And so, yes, it has moved up lately. It's interesting that, you look at what the circumstances are. Clearly, the market's viewing silver as, attributing considerable weight to the industrial side of it versus gold, which is always the sort of a pure safe haven, and the ultimate safe haven asset. And so, because of that, we've seen the preference for gold, especially in the last few weeks, over silver. Um, and so, I think that's what we've seen happening. That's why the ratio has gone back up. Gold has gotten, more expensive versus silver. It takes more ounces of silver to buy 1 ounce of gold. But I do think that as the next few months play out, especially if we continue, let's say we can continue to get positive news mostly out of the US, which will be, will trickle down to, globally, that other partners are willing to negotiate seriously and remove the kinds of tariffs they have. Because, it's interesting. Look, I'm not going to pick sides or whatever, but from what I have read, um, Trump put these high tariffs on basically everyone.
Mhm.
And the world's looking on that and saying, well, that's ridiculous. And, you know, um, so there's really two sides to see here. It's ridiculous. It's too high. It's dramatic. You're killing the global economy. And I'm not arguing with most of that. However, what we I think don't appreciate is that a lot of countries do in fact have high tariffs
Yes.
on goods coming from the US.
Yes.
And so I have to admit that Trump is correct to varying degrees with different countries, that he is correct that these tariffs are in place. In fact, some of the tariffs are overt and obvious and clear, sort of um, uh, clearly indicated tariffs, and some of them are not clear. And in other words, they're not made obvious, I guess, to the market. So internally in some of these countries, they do certain things to tax or to tariff some of the goods coming from the US. But the US is still nonetheless aware of that. And so I think that's where he said enough is enough. And I'm basically fighting back. Now, the other side of the coin, however, which interestingly I've heard one person really address so far, and this is his uh, the vice president, JD Vance. He has said that uh, the US has its own advantage, which is, frankly, I believe, the reason that these other countries around the world have had these tariffs on US goods. And that is because the US has the de facto world reserve currency, right? So, because of that, they have a huge advantage. I mean, they can it's valued highly against most other currencies, and they have the privilege of being able to print it, to practically to no limits. Uh, Most commodities, if not all, are priced in US dollars, so they can essentially go out, print dollars and go out and buy whatever they want. So that puts all these other exporters to the US at a disadvantage, right? And it puts US imports into their countries, makes them more costly because they have to go out and get US dollars to buy those US goods. And so that is the other side of the coin. So, and I think those are the reasons that these countries have had these overt and not so obvious tariffs on U.S. goods to kind of counterbalance the strength of the U.S. dollar and the ability it gave the U.S. to go out and buy goods from those countries at relatively cheap prices. So that's a long-winded explanation, but hopefully it helps to clarify, maybe a little bit of really what's going on.
It does. Yeah, very good explanation, Pete. My next question is regarding silver space. Of course, the love for the silver space. I mean, why are, let's say, hedge funds, pension funds, other institutional investors not invested in silver space more? And could we see that changing? Could that be the trigger for higher silver price? And
It's
especially in the equities.
It's very, very possible. I mean, there are ways that participants like that, um, smaller participants, right? Because I'll give you an example. I was asked just the other day if I thought that silver, would one day be considered a reserve asset. And my answer is no. I just don't see that happening. It's much too small of a market. Um, it's much easier to buy gold and store gold, which takes much less room. It's more readily, it's more readily, I guess, used as money. It's easier to move it around. You move around a smaller quantity for a high value. Um, and there's much less silver available. More than half of it is consumed every year. So the silver market is about, if you look roughly, I'm going to say 1/10 the size of the gold market. I do not see silver really ever becoming a reserve asset. That being said, I think it was last November, Russia said that they were going to start buying silver again for their reserves. Very interesting, right? So they had gold, but they were adding silver, I believe platinum, palladium, and maybe even some other metals. And I mean, to be honest, that I think is more was more of a strategic move. I think because they appreciate to some extent the strategic value of silver, given how it's used in industry, given how it's used in military applications, which unfortunately is something we have, not surprisingly, maybe very, very little data about. But I think that that was probably a lot of the reasoning behind that move. So that's still exceptional. I don't see central banks going back to stockpiling silver. But I do see, to your point, the potential that you'd have these smaller, more nimble participants, like you say, someone like hedge funds, getting into this, buying silver in significant quantities and then realizing that it's very undervalued and having a lot of patience and being able to wait for this to play out. There's different ways they could do it. They could do it in a leveraged way as well. But that's something that would happen. The thing is that, these nimble players are going to do that, I believe, in a private way, at least as they accumulate, right? So they can continue to buy the silver, not make any kind of announcements, but perhaps when they're done buying, then they would, be more public about it. But yes, a player like that. The thing is that, for them to, as I say, have access to sufficient silver, um, it is not it's not I'm not going to say it's difficult because they can buy silver ETFs where they could take delivery. They could buy, there are several, some are better than others. They could do the regular way I was saying before. They could buy the long futures contracts and take delivery. They could just go out and buy physical silver. There are all kinds of participants where they can, or even large bullion dealers where they could flow large orders through and do it on a gradual basis and stay very quiet about it. Um, but it's almost hard to see how that would be enough of a trigger, only because they would do it in a gradual sense, right? If they wanted to accumulate a significant position, they would do it quietly. And then the impact, I think, would be only when they came out and made it public. So, but yes, that's certainly an option as well. That's certainly a way that could play out.
Yeah, let's wrap it up with that. Pete, how can investors, people reach out to you and subscribe to your services?
So I am active on X, the former Twitter, at Peter_Krauth, Krauth. I'm also on LinkedIn, and there's three other options. One is we've probably talked about this before, but I published a book called The Great Silver Bull, which I believe is a good introduction for people who are just getting familiar with the whole silver story and opportunity, and what I consider a generational opportunity. And so it gives you an overview of the whole silver market. It's an introduction, and it explains everything from the history of silver through to, things like supply demand dynamics and how to invest in silver and silver mining companies. I have a newsletter called Silver Stock Investor, which is what I consider more of a real-time way to follow the silver market and what's happening in silver mining investments for the most part. And actually, just 3 months ago, I launched at the beginning of January a second newsletter called Silver Advisor, and that's a free newsletter. Silver Stock Investor is a paid subscription. Silver Advisor is free. You can go to thegoldadvisor.com/registration, and you can put your email in there and subscribe to Silver Advisor. And what I do there is follow a select number of silver mining companies that basically what we do is we review all of their news, we analyze it, comment on it, and that goes out each and every time one of those companies has some news, and so you can keep up to date on some of these great opportunities with silver miners.
That's a very good format. We will leave the link in the description of this video. Peter, thank you for coming to my show. Great chat as always, and I look forward to host you again. I believe soon.
Thank you very much, Lucien. It's been my pleasure as always.